Okay, today is Wednesday, June 18th, 2025. Going to do what I hope to be a relatively brief video where I just explain, for the sake of clarity, what I mean when I refer to a fixed bar method trading plan and what I mean when I refer to a reversal bar trading plan. I am going to be using the FDAX futures. I am first going to look at the opening range. I'm going to use random.org to generate 3 random days between May 18th and June 18th. And I'm going to look at the opening range trade on those 3 days. Any day generated between the 16th, 17th, and 18th of June, I will be using the current DAX futures contract, which is the September expiration. Any dates generated prior to the 16th of June, I'll be using the June DAX contract. So let's get our dates. Okay, so here we have them. 522, 527, 529. Okay, wish they weren't all so close together, but it's random, and that's the point. So, doing May 22nd, 27, and 29. So I'm going to switch back to the June contract. We're going to go first, let's go all the way back to the 22nd. Or, wow, I'm having a hard time here, huh? Found every day I needed, but, okay, so there's the 23rd, so 21, 22. So this is our opening range. How am I going to trade the opening range? Typically, I'm going to bracket it. So buy stop 1 tick above the high of the range to go long. A sell stop 1 tick below the low of the range to go short. My stop loss is going to probably be on this instrument. I'm going to say probably 5 ticks below the midpoint of the opening range. So, and my profit target on most of these instruments is the 61.8% extension of the opening range. I include a 1-to-1, which is 1-to-1 to the opening range. It would actually be close to a 2-to-1, probably be a 1.75 reward to 1 risk, with the 61.8% extension, and then using a larger stop loss, again, probably close to a 1-to-1 risk to reward. But that would be your trading plan. A trading plan gives you an entry point to go short or long or both. It gives you a stop loss, and it gives you a profit target. So in this particular day, looks like would have had a profit of $540.75. There are commissions. I don't know what they are. I'm not so sure this is figuring them in or not. I don't even know the tick size. I do not trade this. But that's a fixed bar method. This is a bar that opens at 2 a.m. Eastern time and closes at 2:15 Eastern. I believe that represents the first 15 minutes of the opening range for the DAX futures. You'd have to decide for yourself if you're going to trade an inside bar. So if the opening range closes and the next bar is an inside bar, so it didn't trigger either of your orders, you have to decide for yourself. That's part of your back testing. time for opening range, I'm going to stick with the orders as they are. Now, I'm going to have to go to drawing tools. Let's remove the drawing objects. Let's go to the opening range on the 27th. May 27th was the next random generated number. Here's the 27th. Opening range. We open, close. We're going to have both a buy setup and a sell short setup. Again, for me, I'm taking profits at the 61.8. I'm setting my stop loss about 5 ticks below the halfway, or rather the midpoint of the opening range. This looks like this also would have been a profitable trade. Again, you can see here you could trail your stop. You can do anything you want. Take a 1-to-1, do it 2, 3, 4-to-1. That's up to other traders, not me. I'm not recommending you trade this way. This is how I would trade it. But this is a complete trading plan. Fixed bar method gives me a specific time at which I will be placing both an order to go long and an order to go short. Defines my risk, defines my reward. That's all you need. Now, this is going to let me actually grab them. That's a switch. And one more was the 29th. 29th. So this is the 29th. And what day of the week? That's a Thursday. Okay, so it wasn't, I just wanted to make sure it wasn't. I knew we had a holiday somewhere in there. So we have opening range opens and closes. Place our buy stop to go long. Sell stop to go short. Again, you have to decide if you're going to trade these inside bars. I do not. I have my own rules with respect to both inside bars and outside bars. They're largely related to how I trade the NQ, so they're not even worth mentioning. But again here, how you trade this basic, simple opening range trade on the DAX. You'd have gone short here, would have hit your 61.8 profit target. If you're doing a futures contract, profit would have been $1,282. But your risk would have been close to that same $1,200 by the time you had 5 ticks to this, I imagine. If you're trading contracts for difference, you're probably able to adjust your position size. I don't know if there are mini or micro contracts for the DAX, but if the only contract I seem to have access to at all through NinjaTrader is this FDAX contract. Okay, so that should be pretty clear as to what a fixed bar method is. It can be any bar you want. If you notice that at a certain time of day, your instrument tends to reverse, then that could become a fixed bar method that would form the core of a trading plan. Again, you have to add your risk elements and your take profit element. But I would hope that's pretty clear. So now we're going to do reversal bar. So let's do, it's going to randomly generate it, but what I would really like to do is I want to do this week, just because the Monday especially gives a very nice, just to show how I look at reversal bars. So here's Monday DAX. I'm going to make it bigger. So we have our opening range here. So as to not confuse things, let us pretend that we are a trader who wants only to trade a reversal bar strategy, not a fixed bar opening range method. So if you're trading reversal bars, you're going to wait for the first bar of your session to close. And then you're going to ask yourself, did the most recently closed bar make a higher high than the previous bar? Okay, you're going to ask yourself that. Now I can edit this. Okay, so if yes, then place a sell stop order to go short below the low of that bar. If not, then did it make a lower low than the previously closed bar? If yes, then place a buy stop to go long above the high of that bar. Now let me see what this looks like. I probably have to clean it up a bit. Okay, now it looks okay. So that's the strategy in a nutshell. So, did the most recently closed bar make a higher high than the previous bar? Yes, it did. So what do we do? If yes, then place a sell stop order to go short below the low of that bar. So I'm going to represent a short order with a down arrow. So I'm going to place a sell stop one tick below this low. So the low is 23,598. My sell stop will be 23,597. Now the next bar opens and closes. Now it closes. We go back to our algorithm. Did the most recently closed bar make a higher high than the previous bar? If yes, place a sell stop order to go short below the low of that bar. Did it make a higher high? Yes. So another order to go short below the low of this bar. Oh. Boy, Ninja Trader drawings really not real happy. I don't know why that is there, 652. Close enough. Okay. And so now the next bar, so we have a sell stop that goes short now at 23,651, one tick below the low of this bar. The next bar opens and closes. Now that it's closed, we're not in the trade. Did the most recently closed bar make a higher high than the previous bar? Yes. Since it did, we're going to place our sell stop now below of that bar. Oh, I think I figured you out. Okay. The next bar opens and closes. Did that bar make a higher high than the previous bar? No. So here's where I'm missing a step. It's an inside bar, so I should have something in here. If not, is it an inside bar? If yes, do nothing. If no, then, okay. Here we go. So is it an inside bar? Yes. So we're going to do nothing. In other words, we're going to keep our sell stop here. Now, you may change that. You may decide you're going to move your sell stop to one tick below the low of the inside bar. That's up to you. The way I approach it is I ignore inside bars for the most part. So this bar, there's not going to be an order here. We're going to keep this order here. Next bar opens and closes. Did the most recently closed bar make a higher high than the previous bar? Yes. I'm going to now place a new sell. We're going to move this sell stop one tick below this bar. And then look what happens. So here's where our sell stop is. We're going to sell short at 685, 23,685, one tick below the low of this bar's low. We're filled, we're short. Now we have to put up our money management so we can adjust our orders. I'm going to snap that to the bar now. Make sure I get that accurate. So stop loss is going to be probably 23,719, 5 ticks above that 50% of the entry of the setup bar or signal bar. And my profit target would be the 61.8% extension. But this is where you enter up here. This is the entry, not down here. If you wait for this bar to close and put a sell stop one tick below, look what happens. You're going to sell short at 23,659, and your profit target is 652. Sorry, I had to pause the recording for a moment there. So you would be getting in very near your profit target, and or you're doing something like this where your trade looks like this. Well, the one-to-one target's way down here, below the low of the day. Even the 61% extension of this bar, price would have to get all the way back in deep into the opening range. And your stop loss is way up here. Or right up here, I should say. So you, I know that there's just been some misunderstanding. You want to catch that reversal. You're not waiting for a reversal bar. I'm not. Again, I'm not telling anyone to trade this way, the way I do it. But I'm entering as a reversal bar is created. Okay, this is the reversal bar. Okay, so I want to be in when this bar becomes a reversal bar. It becomes a reversal bar by virtue of being the first bar to make a lower low than the previous bar after after a series of 2 or more bars, make higher highs. That's it. So I think that should be pretty clear. I think that should be clear now what I mean. If you're waiting for a reversal bar, you're waiting way too long. I'll tell you, all the institutional traders who are doing quick day trades, they're getting in up here. And they're taking their profits. So they're short. So they need to buy. You're looking to go short. So you're basically getting in while they're taking profits. One other word I'd like to say about risk reward is this. For the last few months, I know I posted some videos, I believe to the thread, maybe I posted them in my journal at FDAX Factory. But the only people who preach that you should be trading for 2 to 1, 3 to 1, 8 to 1, 10 to 1 day trades, where your profits are significantly greater than your risk, are trying to sell you something, or trying to be FDAX Factory influencers, Instagram influencers, YouTube influencers, TikTok influencers. Their goal is not to become profitable traders. And frankly, I doubt any of them are actually trading real money in any way that yields them a profit. Their profit is either the money they get from YouTube views, TikTok views, Instagram views, or the feeling of importance and egocentric satisfaction they get from getting a whole bunch of people liking their posts at FDAX Factory, or Elite Trader, or one of these other trading forums. The information that I've found that I believe to be credible with respect to successful day trading over time all points to it being more likely that if someone is a successful day trader, they are trading a negative risk reward. That means they're taking profits that are less than their average loss. However, by doing so, they are winning at a significantly higher win rate than all these so-called trading influencers. So if you're following this thread and you're looking at these type of methods, I would suggest to you that as part of your back testing, you create Excel spreadsheets where you check off the max favorable excursion of each entry in terms of extensions of the setup bar. And I would make my first extension be the 61.8. My next would be a full 1-to-1. Maybe a 1.5 to 1, 2 to 1, then 3 to 1. And track in your back testing, how often does your setup reach the 61.8 before your stop loss? How often does it reach a full 100% extension of your setup bar before the stop loss? 150%, the 200%, the 300%. And if it does reach that 200 or 300% with a frequency where you can live with times it doesn't and you get stopped out, then you can create a trading plan where you devise some sort of trailing stop strategy so you can capture those larger gains. I just know for myself, I much prefer a method that gets me in and gets me out, where my profitable trades are 80 or 90% of my trades. So long as the amount I'm looking to profit on a trade is more or less equal to what I'm risking. And I would even sacrifice that. I'd be willing to take a little smaller profit against a larger risk of loss if it meant my win rate would stay at that 80 or 90%. Because even at 80 or 90%, you're still going to lose 2 in a row, 3 in a row, maybe even 4 in a row here and there. I think that'll be very rare. But over time, if you put your plan together so that you're taking a profit on 80% of your trades, you're going to be able to have confidence in your method and stick with your method and trade through the drawdowns, hopefully resisting FOMO, resisting over-leveraging, over-trading, and all the bad trading behaviors that cause us to blow our accounts and remain consistently unprofitable traders. That's my 2 cents. So, hope this video was worth your time. If it was, hey, share it with somebody who's trading. You can comment here. As always, I prefer the comments to be in the price pop thread at Forex Factory. I am not trying to be a YouTube influencer. I'm not trying to build any kind of YouTube income. And I'm not really concerned with getting likes at Forex Factory, but I do respect Forex Factory. I'm not trying to take traffic from them. I'm trying to add to it. I think there is a lot of good stuff there. And finally, rest in peace, my good friend Rocky Point. Miss him every day. Still can't believe we're never going to see him again at Forex Factory. Have a good day.